Hey, what's up, guys? It's your boy Double Seven. Today is March 22nd. It's about 4 a.m. Just finishing some work and doing the market review video to see what we think is gonna happen in this week. So last week we said that with the stimulus bill pass, we had hit new all-time highs last week. And however, we thought that we might have one more shakeout left before we make another run to SPY 400s. So we got that, as we were running up last week, Monday, Tuesday was really green. Wednesday, it was a reversal, and then Thursday and Friday we came back down. So the general market S&P 500 looks like we're coming back down a little bit, and same thing with the Qs, came back down a little bit. So I think for SPY this week, I think as long as we don't lose this green line right here, which is like $383 area, as long as we don't lose that line, we hold that level, we should bounce off right there and continue to grind up further. And looking at the Qs, pretty much similar. I think that the tech sector has, last week we said that tech is slow on the recovery, struggling to come back. And above 318, we would have been, pretty bullish to 337. But as we suspected, it followed the market where it, kind of came back down, tried to shake everybody out a little bit. So in the coming week, I think, in this week, maybe like this Friday or Thursday might be a nice buying opportunity. I think the tech sector has consolidated enough, and it should start regaining some strength this week and start making recovery in the coming weeks. So that's what I think is going to happen going forward. And then the oil sector, we call this one on the dots, man. So this was a killer call out, and we hit it on the dot on Monday as well. So oil sector was tearing up non-stop last, when we looked at it last Sunday. And it almost hit this line, barely missed it. And we started making, that move downwards on Monday because it was green for so long. Out of the last 28 trading days, when we count the last weekend, it was green for like 27 out of those days. So a pullback was, on the roadmap. It was for sure coming. So that happened. It's coming back down a little bit. I'm looking for it to bounce around this area with a move up. So probably possible move here. Look for it to hold that $46.70 area on the energy sector. You can get into alternative energy stocks such as XOM, CVE, whatever your favorite oil company is. That's where I would look for buying opportunities coming up. And then lastly, we're looking at the dollar index. So last week, I said that the dollar index was throwing mixed signals. Not sure which way it was going. If we are bullish, then the market is bullish, then the dollar index should come down because a higher dollar is bad for the market. It makes the stock grow slower and stuff. So we're looking for it to come down. It didn't come down. It looks like it's moving back up. It could be setting up for another big leg up here. That's a possibility. So if that happens on a bigger time frame, it's gonna be a little bit scary. So I'll show you that on the chart a little bit. So for the dollar index, we're looking at the 10-year treasury yield that's pumping. That's got some huge resistance coming up, and I'll show you that here. It's got huge resistance coming up over here at $1.90, not $1.90, 1.9% area. This is the 10-year treasury yield. It's trading at 1.71% right now. I think if it hits that 1.9 area, hopefully it just gets rejected really hard and kind of makes like this kind of move right here, just comes back down and corrects itself, because ideally that's what should happen. But things are doing its own thing You know, they're doing his own thing right now and just fighting the market. So the higher it goes, if it doesn't cut back down, it's going to be really bad for the market. The dollar index is also setting up this bullish pattern as well, which could be potentially bad for the market. Let me show you the dollar index pattern that I'm looking at. So on a bigger time frame, I'm looking on a weekly time frame. The dollar index could potentially set up this inverse head and shoulder. An inverse head and shoulder is a very bearish pattern, so that will come down like this. This is already set up that first shoulder here, and then this is the head. And if this head finishes, it's gonna come to that $94 area. It's currently trading around 92. If it comes to $94 area, that's where we're gonna be really in trouble, because that's when the head side, the pattern is gonna finish, and then it's gonna pull back a tiny bit. This is probably gonna be our opportunity to cash out or sell in the market before it runs back further all the way up here. And if it does happen, if it does run back further all the way up here, like it did in March, it's gonna cause the market to pull back significantly if the dollar jumps up like that, which I hope it doesn't. But the pattern is setting up there. I don't know what the reason behind it would be, but the pattern is setting up for some reason. So that's something to be mindful. That's why, you know, I still think that's gonna be a wow factor, because I don't see the reason behind it, but there is a possible pattern there, you know. So definitely stay hedged, stay guarded, and you know, be a little careful. And when you're trading, don't go all in. So this is another pattern we're looking at, SPY. Ideally, you know, ideally looking for the SPY to bounce around here and then move back here to the upper trend line before we come back down again. That's the ideal situation. But looking at the chart right now, it you know, it looks like it could come down a lot further if a lot of volume doesn't come in to save it, you know, like it did over here. So that's something I'm super iffy about. Let me see. Take a look at the financial sector, because I haven't looked at that in a while. Because financial sector was green for a long time. It's a little bit red right now. Ideally, I wanted the financial sector to come back to this $31 area. I feel like it still should, because it's been green for so long. It hasn't had a really good pullback yet. So I think the financial sector should still come back down a little bit, maybe to the $32 area before it moves back up again. That would be the ideal situation. But if the dollar index is really strong, that's going to be good for the financial sector as well. So the financial sector will probably run off that. So that's a possibility there. As far as good trades for this week, I think something I'm looking for is probably like the marijuana industry. I think that's going to be a very interesting possible pump play. If it comes back down and it corrects with the market, comes back down to around this $9 area, that's going to provide a really good buying opportunity. And then if they do end up passing the stimulus law in New York, it's probably going to cause a huge spike back up. So I think that's going to be a pretty interesting wild card as well. But other than that, that's the market review for this week. I hope that helps. If you guys like it, don't forget to like and subscribe. And thanks for watching, man. And you know, let me know in the comments if you guys see something else that's interesting to the market that you think I should look at. But with that, wish you guys have a good luck trading this week and have a great day. Take care.